Yeah, I mean, look, I think if you look at the debate and the points that were brought up, I think it was very consistent with what people expected going in. I think the comments we're seeing from Trump are very much on the inflationary side, tough on immigration, which is going to look at labour shortages, and, talking up, looking to put in place tariffs, which, again, is going to hike up costs. If you look at what Harris is coming from, it's probably a little bit more deflationary. Potentially we're looking at tax hikes next year. And again, very tough on potentially on regulation and going after some of the big cap tech. I think the reality is when we look at the market, these policy changes, if we go back historically and look at other debates and other presidents coming in, often trying to position portfolios on these policies, it hasn't worked as well. What's come through over time has been fundamentals, and broadly the economy has ridden through. So I'd put a word of caution out, just trying to sort of position portfolios in anticipation of how these guys are positioning. They're both broadly, I would say, sort of positive to the economy.
Right. I just want to clarify to our viewers, I said that this was the only presidential debate. Well, it could be the only presidential debate that we see between the two presidential nominees. We'll have to wait and watch out for whether or not another one is finalized. So I just want to make that caveat and clarification for our viewers. But going forward, in terms of the fiscal situation in the U.S., right, in terms of fiscal spending, you already have this open debate going on whether the Fed is going to cut by 25 basis points or 50 basis points, whether there's going to be a soft landing or a clear out recession. How do you see that playing out? Because whatever happens with the economy would have some bearing on the markets, which have rallied away thinking things are going to be looking hunky-dory for a while.
Yeah, I mean, there's a general view in the market that it sort of matures on the 5th of November, and so everyone's scrambling to position for that. The reality is, I think, we need to look through that first cut and don't get so transfixed on what size it's going to be. We certainly at Citi Private Bank see it as 25 basis points, that the market is sort of edging towards 50 basis points. And come the end of the year, where we're expecting it to be a total of 75, the market's now over 1%. And we've seen that in the 10-year that you flashed up on the screen. I think the reality is when we look at the economy, you talk about soft landing, we expect a soft landing. We are expecting a scenario where some of these labour costs are going to come back, that the tightness of the labour supply is going to ease off. And we think next year especially that's going to feed through for a little bit of the tailwind in regard to EPS and margins. And so we're looking for 6 to 8% EPS growth next year, and probably topping out about 9% EPS growth this year. So any volatility in markets right now, any sort of corrections, we would be looking to buy that.